What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you are interested in. Consider subscribing, as I do provide content weekly on here and am looking forward to creating other content on current events in the market as we continue forward. So, again, if that sounds like something you're interested in, remember to subscribe and to smash the like button ever so lightly, because today is going to be a good one, as we've had a very informative week over the past week and some things that we can start looking forward to moving forward. Now, as always, as per the always, we're going to throw this up so we can kind of get an idea of what we're looking at here. So, as always, what I like to do is provide a little weekly recap, as it's important to know where we're coming from and what the next potential steps are. And that's why I try to differentiate myself between everybody else on the tubes, is to try to essentially step this way through the market as our current market sentiment and kind of where we're going. Again, I don't like to project too far ahead because the market is very dynamic. And if you've spent any time in the market, you realize that it is very dynamic. The market is also very emotional the longer you are in the market. So that's something to keep in mind. It is extremely emotional given the current circumstances in the sediments. So, with that being said, let's go ahead and get right into a weekly recap. So, over the past week, we've had monetary policy. It was highly anticipated. I think there was like almost a 99.9% chance that we were going to have a 25-point basis move, and we did. So that upticks interest rates yet again. Now, this is something that is a huge problem, because something that's not being advertised is this is doing a lot of damage. And again, out of headline news, you're not going to get what's actually going on. And this is all started from a lot of different things. Considering, again, printing of the 20 or the 40% of the money supply just a couple of years back, and we're seeing the impact of that on the current market sentiment and how long it does take to play out, and these essentially interest rate increases and what it actually is doing to the market. Now, we did pause in the last one, so this is what is interesting. There is a 50% chance essentially that we will raise 25% more. Now, you should be asking your question, well, if inflation is defeated, why are we getting more interest rate hikes? And I think it's more so because Powell or the Fed want to try to expedite this process of trying to essentially do this quantitative tightening, get it over and done with. And there's some other things that actually came up this week too, that speaking of which, I didn't mark on here, but the yuan, essentially the person you want to call the Powell of Japan, right, is said that what is currently going on is they're thinking about increasing rates on their side, which they haven't done, and I think in about a decade. Now, this is something we talked about, the ECB increasing rates, which they haven't done in a decade till they started doing it, and it could be a huge concern for our economy in the fact that they hold a ton of our essentially our bonds. So if that happens, this could be a huge problem. Now, this is something we haven't really predicted or kind of brought up. Again, if you are in the market, the yuan does play a big part because of the fact that they hold a lot of the U.S. bonds. And so, with that being said, if they do decide to uptick this, there's no solid evidence that they will. There is a lot of rumor and discussion about that. That's something to clarify here, is that if it does happen, it can be detrimental to our economy. And understand that what's going to happen there is that again, this whole process we've been talking about will be expedited, and so you could see a huge market correction, especially at these overextended levels, technical wise, that we are looking at. So with that being said, we will wait and we'll see, but that's something on the essentially on the agenda that you need to pay attention to. And this is what I try to deal in probabilities on this channel, and to try to make you aware of certain things that could potentially drop the market, and especially at where we're at. Again, I like to always emphasize that I am a perma bull, but in this current market, there is just way too much for this. We need a normalization of the market, of everything, not just in the stock market, but in housing, the auto industry, everywhere around the board needs to be normalized because these prices are unsustainable. And something you need to understand, you don't want this market to keep going up because it is unsustainable. You are pricing more than half of the population in the US out of the market by doing what you are. And not to say that across the world, the way essentially the US has manipulated the dollar, that everybody else is suffering because of our moves, because essentially the global currency is the US dollar. So, with all that being said, let's move into the next segment. So, um, over the past week, we started some big earnings. It's something I talked about strategically placing earnings and how they have been. So we had the banks essentially placed on a Friday. We've gone through the banks, which I'm going to get into because there's some really important bank information that came out this week as well. And then we essentially went into Netflix and we went into Tesla earnings. Again, a lot of weakness, a lot of revenue, major revenue hits. There's a huge decline in growth that is not essentially kind of televised. It's kind of pushed in the back. They release it, but it's not something that's highlighted in headline news, and something I talk about all the time. And so with that, now we had this past week, it gave us more insight, especially into the top 7, because remember the top 7 with the popularity of ChatGPT and AI, that essentially pumped up the market. And so we get another taste of Microsoft, Google, Meta coming out. And again, expectations are low. Google still did quite well despite everything that's going on. Meta took a massive hit in the whole metaverse and everything that was going on. They lost billions on that essentially deal. Hopefully they can still pull that together. We will really have to see what goes on there. Microsoft in itself, again, barely beating, which is not a great thing considering, yes, AI will play an important part of our lives, but something I've talked about is the fact that AI isn't, people have this expectation whenever they start talking about forward guidance and stuff, people have this expectation of potential that is there. Yes, the potential is there, but you have to bring it back down to a realization. Yes, you can take advantage of pumps on potential, right? So these stocks will fly up 10x off of something that we've seen over ChatGPT, because it is changing, it is life changing, it is altering, it will change the way we do business, it will change the way we just do life in general. Yes, it is the new internet, and yes, I do believe it is there, or it is something that can change and is changing things, but to get it to where people are expecting it to be is going to be a very long time, as you do need to train these models for years on end. And something I've also highlighted is Elon has pointed this out, and especially when he's talking about automating driving and that aspect, it takes a very long time. Now, it's not quite as complex as doing having essentially autopilot, and understanding that obviously you involve lives and stuff there. But when you're talking about ChatGPT and replacing people and stuff like that, it is still a long ways off of doing that. It can give you a good base, but ultimately understand is still by far a long ways from doing that. So being said, again, great insight to this week on what is going on with the big 7 stocks, because there is a lot of weakness in there, a lot of revenue gouging because of high interest rates. And that being said, this is something, I want to point these things out because people just want to blow over these things like, it's not that big of a deal, but they are a huge deal in understanding that we are in a banking crisis. SVB, when it happened, I talked about this, there was going to be staggering, essentially more bank failures. Even Yellen has come out and talked to you that there would be more bank mergers and stuff going on. And something I was looking at, especially over the past 2 weeks, it's been really, really eerily quiet in the background. If you look at Fred and a lot of the other essentially loan pools, the FHAL, I believe it's called, is they have this pool of money that they are essentially doing loans for mortgages, and that sometimes they dip into that pool because it's not like a public thing that shows stress on the banks, but they have been dipping in that pool a lot, and it's gone way up to numbers surpassing 2008 to keep afloat. And the only way that goes up, yes, if there's a big uptick in mortgages, but we also have the data understanding that the supply of houses is at historical lows. So how are these mortgage loans going up so high past 2008. And the only reason it goes up because it's kind of a safety net for banks to go into to bail themselves out without making a big shock and awe. And that's what they've been doing, despite even this new tool that's been generated for them, essentially $30 billion that's a 10x leverage to help them bail themselves out. And so with that being said, this week we had PACW. They were supposed to report in 24 hours, and they came out the night before saying that they were in advanced talks to be acquired. PACW is another one that was when First Republic went under. There was a bunch of banks along PACW, Western Alliance, I believe was the other one, and they were concerned that they were going to go under. And then you had someone like your good old CEO of JPM saying, "Hey, you shouldn't be, throwing this information out there. That's misinformation. These banks are fine. Blah 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 blah. Don't short the banks." And then come out. And something I talked about staggering, they're trying to push it off to the next earnings essentially cycle. And so now we're seeing PACW advanced talks got acquired. Then come Friday on the close, U.S. Bank Heartland Tri-State officially closed by regulators. Another bank failure. So this is going on behind the scenes. And then something I've been talking about, what is currently going on is too big for it to just keep pushing up. There is too many problems. Understand that we need normalization. This is normal part of this cycle. When you print 40% of the money supply, you're going to get a huge uptick in inflation. It's something that we've talked about. There's concerns about more inflation coming on deck. And so that is a concern that could potentially come into next year. And that's what the concern is on a lot of different things. And Powell's even stated that it may not be till 2025 till we have 2% inflation again. And so this is something you have to understand, that this is a long process and is very painful. I understand that. Not saying you can't take advantage of the upticks, but again, technical wise, and this is something that also, if you're a technical person, we are too overextended to just keep going, right? If you make a parabolic move up, it will go down twice as fast as it went up. And so you have to be very careful technical wise to be buying at these levels or considering buying at these levels unless you're willing or have the powder to be able to DCA on the way down if we correct 25%. We've also got news articles from other banks stating that we could have a 25% correction from our current point. So with that being said, again, banking crisis very much alive, but now we're aiming more towards companies, corporations. And 3M started laying off more people. We started seeing more layoffs there today, or this past week, I should say. And we will continue this week. Another huge week of earnings this week is going to be extremely important. Oh, and something else to mention. When I talked about strategically placing corporations for earnings, you have, I believe it is NVIDIA, which has been the hugest, the push for this 10x AI and all these 7 major stocks to be pushing up. They don't have earnings till like the 18th, I believe, of essentially August. So they pushed that or delayed that as far out as they could. Normally it reports in the same week as some of these other big ones or shortly after, but it's been pushed out pretty far out. And so nonetheless, this week, before I start getting into some of the earnings things, this week, big events, we don't have like tons of big events ever since we have the 25-point basis move. You have to understand we're in a window between now and September is the next monetary policy. So we got essentially 2 months of relying on data. And this is why Powell kept reiterating over the past week that we are watching for data. So data is going to have more of an impact. Non-farms are going to have a big impact. Your core, and then the PCE, which is also came out. So these particular things are going to have more of an impact because we have that dead zone between now and next monetary policy. But again, we aren't earnings, and that is more showing than any of the data that's out there and can be more impactful, especially seeing what we're seeing. So again, Friday is a big event. We have non-farms. Again, if we start reflecting numbers on bad data, of recessionary type numbers, it could have a huge impact. But again, they will continue to pencil whip this thing to try. You have to understand there's an election in a year. They're trying to delay this if they can, so that way they can put the blame on whoever the next president is. So being said, they will do whatever it takes to prop the market up. Be mindful of that. This is why despite all the bad news that's coming out, more bank failures, it will not surprise me if they keep pushing this market up to all-time highs just because of that fact. So be prepared to swing either way, but be very risk conscious of what is currently going on, because at any moment some news can drop that will be shocking and drop the market. You have to be mindful of that. That's the current market we've been in over the past the past 2 years, about a year and a half right now. So being said, that's why you have to have risk management is huge. So we just had monetary policy. Again, the next one is until the 20th. Core inflation. So we're going to get two core inflations and two non-farms before the next monetary policy. So keep that in mind. The next one is in August 10th. Upcoming earnings. There's a ton of earnings this week. A lot of really good, insightful earnings that are going to show a lot and expose a lot. Now, over the past week, like I just stated, we had PacW go under. We had another bank actually fail. I think you're going to see more of that continuation into this week. So you need to be very mindful of that. That is separate news that could potentially be happening throughout this week. So you got to be very adjustable to that. Again, it could be a really impactful week, especially after Thursday. You have Amazon and you have Apple. They hold Apple itself holds a huge percentage of the index. If it does bad, that is going to be extremely bad for the markets, as everything is barely beat expectations, and when expectations are in the dirt. So if we start getting more bad earnings from Amazon, from Apple, that could take down be the thing that takes down the market. But we do have AMD, Cat on Tuesday. Wednesday, we're looking at PayPal and Shop. Thursday, Amazon, Apple, Airbnb, and Coinbase. So we got a very big week on deck, again, especially after getting some bad bank news. So it will be very, despite the fact the only thing we really have is Friday non-farms is like for an event, like an economic event going on this week. We have really big earnings, and this is why this matters so much, because it gives insight into what's going on. SPX is dropped down to 53. It was a little more higher last week. I believe it's sitting at 63 last week. So again, because of monetary policy, again, we don't have a lot of big events. It's still high. Considering it's at 53, it's a little high. It's about normal, about average for SPX, especially if there's an event like non-farms. Tesla has come down a little bit. It's had a massive push. But again, if you hear any bad news about inflation or anything like that could potentially happen, Tesla could be hit first and very hard, very quickly. BA is broken out. That range that we've talked about forever essentially had earnings this week and is broken out. So that gives the market more of a bullish sentiment. Again, we will see if financials and value can hold up the market and you start getting some top tech earnings. This market could sustain itself despite all the nonsense that's going behind the realization of what's actually going on behind closed doors. And you can see why this thing is so heavily manipulated to essentially get people paid, right? And people who don't want their 401ks going in the dirt. And corporations to fail because the stock market is crashing. So they will do whatever it takes, especially in the year of election. And so you have to keep that in mind. So despite all that, we can go ahead and drop into some technicals here. Now, I did go a time frame up. I am on weeklies. I think it's better to kind of see what's going on here. It kind of also gives you more of an insight into the parabolic move that we've had over the past month, or the past couple months, just to say. So as of right now, as you can see, we're continuing to chop up, especially after that huge drop. And I've talked about this so many times. This was right after Powell this happened, and the market absolutely cratered. That was a huge candle that turned around, I think, within like an hour, and it essentially bottomed out roughly around that 34.82, and then it just started ripping ever since then. I talked about this move, again, very heavily manipulated. When you see this, and I called this out back. You can even look back in October when I called this out. But this is right after a Powell event, and it flipped the market, and that's the market's essentially been going up since. So then we played this range for a little bit, broke out. Again, we're not at all-time highs yet. We're pretty close. Let's take a look on how far we are. I think roughly around 5% away from the top. So again, if we turn around and start heading lower, strong possibility. We've seen that move happen during the pandemic. And so initially, when you get those first warning shots and scares with the pandemic, you had a sell off much like this. And then we started recovering, and then we recovered pretty big like this. And then all of a sudden, some more news dropped, and then lockdown, stuff like that. And the market just tanked after that. And for like, it was roughly around like a month or two, we had like, I think we were limiting down like every other day. It's most limit downs probably in history. We had quite a few limit downs just because of the unknown. And so there was the market just essentially cratered in about 2 months. It came down fast and it came down quick, and then it recovered quickly after that. So that's what I'm kind of thinking could potentially happen now with when you're talking about manipulating the yuan and everything to essentially put more pressure on the U.S. economy to break stuff, because it's not. That's the problem, is the demand is still there, and Powell is trying to kill demand so inflation goes away. And so you have to understand what's really going on, and the actions that the Fed are taking are what you need to be paying attention to. If they are not, if the demand's not going away, which we've seen some uptick in houses and stuff, which is again very heavily manipulated, because you get essentially data that is not straightforward. You have things that contradicted one another. And so with that being said, we will see what is the truth. And that's why I like looking at earnings, because earnings will tell you what the truth of everything is. And again, even Google, despite it being doing so well on some aspects, you have to understand over the past couple months, right, it's lost about almost $20 billion. Right. And so if you take a look back, you can see what is actually happening here and the heavy manipulation to get this thing pumped back to all-time highs before the next election. And very much so, I think they could, if they could sustain it. But the problem is you don't know, right? If a black swan happens, it's going to happen, and the market is going to correct. And so that's what I'm saying, is you need to be careful, despite even though they're trying to prop this thing up until next year. That could very much change very, very, very quickly. So that's what we're looking at this week. Again, if we get rejected here, would not surprise me. If we can't hold roughly above this 45.54, again, we got news about more bank failures on Friday, or an actual failure on Friday. Is that going to draw a panic again and we start selling back off? And then if that's the case, I would look for us to at least draw back to the 43.15 and see if we can hold there. And again, by the time we made it to 43.15, we would have to check the market sentiment. Then again, is there more bad news that is leading, and that could potentially start leading to more of a correction again? It's hard to tell. Maybe we go back to 3,800. Will we go back to 32? I don't know. Again, it all depends on how the events unfold. And this is why you can't really project 6 months, because you can go a couple months out and kind of understand what the current economic calendar is, what the current earnings cycle is, kind of base it off of that. But ultimately, you're going to have events that are unforeseen that are going to happen that can change the market dynamic very quickly. So we'll see what happens. Will we go all-time highs? I think at this point, we're going to need another week, especially we're going to see what's going on with Apple and Amazon, and then we kind of take it from there. Bitcoin is still kind of struggling around that 30K mark. Again, I think the market's going to correct. How much, I don't know. But I think Bitcoin is going to be right there with it. It will correct, but I think we will have a huge boom cycle right after this. It almost would be as if we essentially sold off heavily, corrected, had some form of normalization. And then from that point, that we could potentially have a big, huge boom cycle into the election. If I was the administration, that's what I would want. I prefer, let's just go ahead and wipe this thing clean. Let's have a huge boom cycle right after the fact. So let's sell this thing off for 2 months. That gives me a couple months before election to just make this thing absolutely rip, right? And so to be able to do that, you need normalization, because right now things just aren't correct as of right now. So Bitcoin, again, still needs to break the 32K mark, in my opinion. If it breaks back down below the 26, I think you're in trouble. You're going to definitely, I think you will definitely see it below 15K if that was a point, if it does break back below that support level. So we'll see what happens there. Tesla has been tried to rip, but started getting corrected. I see this at least correcting back down to the 228. That's a price target that I'm really interested in. Again, you have to be mindful. If we do start selling off and correcting, are we going to correct back even to lower lows? It's hard to tell. But one thing I do like about Tesla is it's almost like a cult, and so it's picked up quite quickly. As you can see, it recovers very quickly, especially after huge sell-offs. It does recover very fast. So again, you look at the bigger picture here. It's not. In short, it's a new higher high, but in short, it is a higher low still. So you still need to break, in my opinion, up over the 300 mark. We haven't broke there. I think this thing is going to correct back down at least to the 228. If you want to start DCAing there, again, not financial advice, you could. Will we see new lows? It's hard to tell. Tech took a heavy hit last year. Is it going to correct? We may not go as low. We don't know. That's one thing that's not for sure, but I do want to start looking at it at 220 and then go from there. Again, watching 300 on the upside. If it does break there, I could be looking at all-time highs very quickly if that does happen. Palantir is another big one I'm watching here. I'm hoping this thing at least corrects down to 13. There's a lot of good news. It is the earnings side. Earnings is coming up very quickly here in another week. They got upgraded on Friday, so you get quite a bit of a boost. Talking about a 25. I really would like this thing to correct back down a little bit, start DCAing maybe at 13. But ideally, if we get it back up below 10, would be ultimately where I would really love it. But we'll see what happens there. I'm gonna bring up NVIDIA. And now this is what I'm talking about. This stock alone has pushed the markets up just because of the popularity again of ChatGPT. We're really gonna have to see. I wouldn't even think about DCAing into this thing until we really hit 300. And who knows how quick this thing could come back down and correct. Again, if it misses earnings with this 10x expectation, it could correct pretty nasty. So that's one thing I do want to keep on deck. Just want to show a visual of that. PayPal. Now, I talk a lot about different things that are currently going on in the market, but I don't talk about a lot of different stocks that I'm kind of looking at. I have been looking at PayPal for a while. I had played it a couple different times, but ultimately right now, this thing could start potentially pushing up. I like this. This is my typical move. So I like the fact that it's consolidating nicely around here. I might start DCAing back into this as we continue forward. Again, I would go gradual. Again, just my opinion, not financial advice. But I think at this level, anywhere essentially between 90 and 63, I think is a good level. One thing for certain is a lot of times when you start getting this, you'll have a huge spike down, which is kind of huge the liquidity drain. So it essentially tags everybody out. Then you get your big buy and then it rips. So even if the market does start correcting, since this thing has corrected so much, I could see us dipping down, potentially down into the 40s, 30s, and then start ripping back up, and then potentially going for that back to that 300. I think is a strong possibility. So something I definitely want to watch. I might actually start to DCA in this thing, as this thing is one of the few that are still have been really beaten down. So I do want to really watch PayPal moving forward, and then Amazon and Google. Let's take a they've made almost about 50% back just because off the rally. They do really bad. Again, they've had some really bad earnings, but this thing is massively corrected. Could be a strong possibility. We want to see where the demand is ultimately with where the consumer is. And if they again report bad, this thing could start sinking pretty heavy. So again, if big tech corrects, that could be really nasty. BA, like we talked about forever, it's finally broken out. So you had a massive candle, essentially after earnings on Wednesday, I believe Wednesday morning. They had a massive rip. I could actually drop this back down to the daily. So had a massive rip and breakout. Question is, this thing hasn't pulled back. So at least looking for a pullback to the 220. The question is will it pull back and then bounce or just continue to drop? So again, we have to see. Again, it has horrible earnings, right? Like it's better than anticipated. So again, they're trying to hype a lot of things up. So these are things you have to keep in mind that they're just not going to tell you on the call or anything like that. It's always supposed to be more of a positive sentiment on looking forward, which you should have as a business. I think you should have that, but also on the same token, I think as a trader or an investor, you need to have this a distinction between the two of, yes, it's good that they're being positive and trying to build out, but also understand what the market sentiment is that they're not doing great. There's again, the current market sentiment is really bad. It needs to be corrected. So you try to, again, play that in. Again, the market, it can rip all day long and not make any sense. So that's something you have to always be mindful of. And then finally, JPM, again, massive rip since earnings, just like BA. That's good for overall market strength. So be mindful of that, as it could lead to a potential bull market. So it really depends on how we open up on Monday and what we are looking at as far as the sentiment. We had bank failures. PACW, advanced talks didn't affect the market at all. The market didn't care. But we had a failure announced on Friday. A lot of the numbers are very pointing to a recession, and you will get a recession based off of what is currently going on. And then the rate of these essentially interest rates and where they're currently at, and understand they were talking about holding these rates for a long extended period of time. It's going to hurt. The longer it stays at high interest rates, it's going to hurt corporations. It's like essentially mold, right? Or rust. It's just going to chew away at these corporations until, one, they either break and fold, which you're going to want quite a few to happen. This is the pain that Powell is talking about. When these companies go under, they start laying off people and no one can find work, right? And so these are the things that you have to be mindful of. So you have to be paying attention to what's going on with Powell and the Fed. Is their actions are where you need to be focused on, not the random data, because they interpret it how they want to interpret it. You can try to interpret it however. The market will move, have daily moves off of these things. But if the realization of what's currently going on actually hits the headline news and these things aren't pencil whipped, which you're going to try to pencil whip them the best they can, and to try to get us through this part. But we will see. We will wait and see and try to deal again in probabilities. That is what's going to help you in the market. So with that being said, if you made it this far, I do appreciate you. Go ahead and drop a thumbs up. And until next time, I'll see you guys later.